My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Good morning, everybody. Welcome to my trading game plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. And of course, we're going to dive into the data and the charts to see where the markets are heading. All of the stock market. We'll look at crypto as well as the precious metals, and even taking a look at where the dollar and 10-year yields are currently trading and where they're likely headed. All right, now let's get right into the mix here today. We have the S&P futures grinding higher. Remember, last week was a pretty rough week, specifically for AI and semiconductor stocks. They began to correct. What's interesting is that Friday actually saw the S&P close flat on the day while the Nasdaq took a bigger hit. Now, we can see today the S&P is grinding higher again. Couple reasons for that. So number one, just after the stock market closed on Friday, and I'm sorry, I can't even say this with a straight face, is that we heard that the U.S. was striking Iran. So stock market closes, news hits that we're striking Iran on Friday. Then we apparently are firing missiles back and forth with Iran all weekend long. Come Sunday night, just before the futures open, and there's an agreement to halt hostilities and missile attacks, and they'll start talking again this week. So again, what this tells us from a technical data-driven perspective is that President Trump continues to make every decision based on what the stock market is doing or when it is open and when it is closed. Now, that gives us good information going forward to understand when things might occur if they are bad and when they might also halt. So interesting on that front. Overall, oil is flattish on the day, kind of chopping around just a little bit. But like I said, S&P futures are trending neutral to higher. Now, the other factor here is this is a holiday pre-week. What do I mean by that? Well, we have Friday, the markets are closed on July 3rd, and that's in observance of the July 4th holiday on Saturday, this coming Saturday here. But in general, institutional money, and I know this from being in the institutional game, it tends to take off the entire week. When there's a short week, big institutional money is going to leave, whether they're left already this weekend or if they're leaving Monday or Tuesday, they tend to take more time off. This means that retail has the ability to control the markets just a little bit more than usual with their volume. And therefore, it gives a neutral to upside bias. One thing I always like to say is that retail, the masses are generally going to be bullish, right? They're going to be constantly buying. Not only are they brainwashed by institutions to just buy every dip and continue to go long to be exit liquidity no matter what, but also remember, if you're depressed, if you think negatively, what do? We medicate you, right? The pharmaceuticals, they come out, they give you something to be positive. So they're just human nature has a tendency to be positive, and it always kind of keeps that underlying flow. So my thesis of this is that while I think the markets have broken key levels, and we're going to look at a couple key levels in just a minute, I do think that on a holiday week, it's very likely we float neutral to higher. We also know that the president, like I said, he likes to have the market going up into these special days, like the 250th birthday of the United States. All right, so back to the charts we go with futures neutral to higher. Let's flip over to the S&P 500 here. The S&P 500 is still holding its major support. Now, remember, we do have a low, lower low, high, and an unconfirmed lower high. To confirm this lower high, we need to take out this low right here. If we do that, we also break back within this bigger parallel channel that goes back to the COVID low. So there's a lot going on here, but the key takeaway is that as of now, we have not broken back below this level. Now, one thing to remember as a technician is that the biggest moves come from failed moves. So right now we are holding a breakout, right? We had a breakout of this parallel channel. We came back, we tested support, we bounced up, making a lower low, of course. Now we've come back in, kissing that line again. Do we hold it, or at some point do we break? If we break, remember what happens. The biggest moves come from failed moves. That opens the door, if we get back below here, to a much bigger corrective move. Now, there's something else I want to show you guys on the Nasdaq composite. All right. So if we go to the Nasdaq Composite daily chart, number one, we didn't get a lower low here yet, but we basically got a double bottom. And this shows us that the tech sector is a little bit weaker. But if we throw on our 50 moving average, this is important, guys. So what we see here on the 50 moving average is that when we break significantly below the 50 MA, there's usually a much bigger drop versus other periods where we kind of just chop around. So take a look at this. Here we were hopping along the daily moving average, 50 moving average. We broke. What happens? A much bigger correction. This was your 2025 April drop. Now notice how right here we gapped above it. As soon as we got above it, then we ran up. Then we chopped around here. We chopped around. We broke below it. And look, then we got our bigger corrective move. Then what happens here? We gap back above the 50 MA and we run all the way back up. My point of showing this is that here you have a hit, it held, but look, they gapped us just like here where they gapped us above, they gapped us below. Historically, when we get below and we don't recapture it within a day or two, we see that there's a much bigger corrective move, a la right here, right? Big drop, and right over here. Well, all in all, what do we have now? We have a break of the 50. Now, granted, maybe they can rescue us, but what I'm watching this week is if we do float up, and I'm just extending this out a little bit, this moving average, if we do float up, do we recapture it, or do we do what we did right here where we broke, went up, kind of tested the underbelly, and then started our bigger sell-off, right? And then same thing here where we never really retested. We just collapsed all the way down. So the 50 MA for me is essentially a moving average that guides me to when the markets are in a bullish mode or a bearish mode in the near term. The 50 MA only really tells me near term. It tells me the bias based on, let's say, the next month or so. And that's why I'm focusing in here. Do we have something bigger that's going to trigger a bigger drawdown in the stock market with this break of the 50 MA? Again, I'm watching this week. Does it retrace but not get back above? In which case, okay, after July 4th, I would expect another bigger down move, much a la this one here. Or if they recapture it, maybe it's more like this little blip here or this little blip here. Which one ultimately is it? All right. So again, little things like this, I just love looking at. Now, I just educated you on something on moving averages. I do want to talk about, just before we get into more charts, that right now for July 4th, from this period starting late last week to all the way the 12th of July, we're running a 40% discount on every course that we have here at verifiedinvesting.com. So again, if you wanted to learn the Winning Trader series, my elite institutional grade course, 20 hours about of coursework, but everything I know, it's on sale for 40% off. Any of my other courses, like the mindset course, same thing. If you want to learn the 1-minute scalpel or any of these other amazing, the overnight hold trade, the overnight trade, I mean, any of these folks, 40% off. We only do this twice a year. So get it while it's hot. These, again, have the ability to change your financial future. All right, back to the charts we go. Let's move on. The dollar, remember the US dollar was hammering on resistance right up here. As of now, it's correcting and pulling back. Now, this doesn't mean it can't break out in the future. We got to watch to see what happens here. But right now, it is getting a drawdown support. There's going to be a little bit of support right here now. Notice how we broke. So high pivot's right here, here. We broke above it. That now becomes a minor support. Now, it's not major because, again, we've kind of been in this choppy zone for quite some time, but it will be a minor support. Draw down to about 100.4 on the DXY. The 10-year yield, basically flat on the day. The 10-year yield has come in significantly here over the last month or so, and that really coincided with oil starting to come back in. Looking at crude oil, you could see, again, crude continues to kind of just sit sideways for the last couple days after it fell all the way back down. As again, you know, markets are looking at everything going on with Iran and saying, yeah, sure, there's a few missiles flying back and forth, but overall, they don't believe that it's going to escalate to a shutdown or more major conflict, at least for now. They don't believe that. And that's just showing us in the chart of oil, right? What oil is doing. So again, I do think there's good support here. Even if it fills the gap around 67, I am slightly bullish. Like if I had to choose bullish or bearish bias, we're so close to major support around between 67 and 70, plus their strategic reserves need to be refilled, that it makes sense that we could be due at some point for a little reversion trade. I don't think there's a lot of upside here. I'm kind of eyeing this $80 per barrel level. But again, that's not a bad gain on oil in the near term if it gets there. SpaceX, as of Friday evening, got announced that it was being added to the Nasdaq 100. So again, it is up a little bit today. But what's interesting about SpaceX is that usually you would see a bigger jump in the price of something being added to the Nasdaq 100. We're really not seeing that. Yes, it's up today, but it's still basically at the lows of since it became an IPO. And I think that's very telling about the change in character in the market, right? I mean, it used to be, I still remember when Robinhood got added, or even the rumor of Robinhood getting added to the S&P, it was like up massively, like 10, 20% in a day. Now you're getting like 3% moves out of SpaceX for being added to the NASDAQ. Just something to pay attention to. This is a change in character in the market structure. All right. Microsoft, I've been a big fan of for the last week or so. Had a huge bounce on Friday. Again, up today, trading around $380. Again, good quality name, beaten down, getting a technical bounce, bouncing again today. I'm still optimistic that we should head back to this area here. And you can see why I'm choosing that area is that if you look, you have your pivot low, and then we broke and we made a pivot high. So if we do rally up, this is the logical zone around $400 where Microsoft should meet resistance. And right now it's, I mean, in all fairness, it's already up from 350 to 380 in the pre-market, right? Obviously, 350 was last Thursday's low. Then Friday had the big bounce and it's at 380. But I still think it could go to as high as 400. Oracle had a horrendous week last week and really the last month. June was a bad month for Oracle, dropping from $250 to $150, $100 drop in one single month in Oracle. It is getting a little bit of a bounce today. Same thing, very oversold, coming into technical support here. And if we just look at the charts here, I mean, it is kind of interesting to take note. We could make a case that, again, you're very, very close to technical support right in here, right? If we look at the chart here, going back to the 2022 lows, through this low, you kind of pierced it right over here. And then lo and behold, what did we hit on Friday? That low pivot right there. I do think Oracle is due for a technical bounce as well. And I think this goes along the lines with a deleveraging or diversification from the AI trade, right? So we've really started to see these AI stocks starting to come in significantly. Again, we're talking 20% drops on some of these names. I mean, even NVIDIA, you look at NVIDIA and it is bouncing a little bit today, but it broke major technical support on Friday. We'll see where it goes today. And it might float up this week, but it's still way off its highs. Broadcom, way off its highs with a bear flag formation, small bounce today. But ultimately, that chart tells me it's likely going lower as well. And even if you go to some of the memory stocks, Micron on Friday gave back 50% of its gains from the earnings move. And guess what? It's not even trading up today. It is now down pre-market on Micron. All right. Now you might say, wow, but those were so great earnings and their margins were just tremendous. Why is it trading down? Why is it pulling back? Why isn't it going up? All these analysts upgrading and taking out their pom-poms and shaking them and jumping up and down. Well, the answer is very simple. Smart money recognizes that this is probably peak demand for memory, meaning that this is as good as it's going to get. So they're selling into it while retail gets caught up in the pom-pom pumping and the fist pumping and buys in. Institutional money has more money, therefore price is going to start to come in. Exit liquidity is there. There's no doubt about it. Crazy stuff, guys. All right. Looking at a couple of these other ones here, if we go on to more, we can see here that we have STX, another great example. Look at the drop on this thing. From the gap up on Micron earnings to 1,112, closed at 900 on Friday, bouncing just a little bit. But I mean, that's a huge 20% drawdown in 2 days of price. And again, this is the kind of the thesis, right? I mean, this is what I've been saying for the last week or so, is that the Microsofts, the plays that you've seen like Meta, even Meta, and by the way, I'm not saying I'm bullish on Meta or Microsoft long term. Remember, I'm a swing trader, day trader as well. So I'm in and out in days or weeks. But right now, I feel much more comfortable in a Microsoft or an Adobe or a Team or or a Oracle than I do being long a Micron. Now you could say, well, but valuation. Yeah, but valuation is always backward looking, even whatever the company says. I mean, how many times, think about Oracle. Oracle, when it topped at its all-time highs about little less than a year ago, they came out with the most robust guidance ever. Like, holy cow, the stock was up 40% on earnings, basically touching $1 trillion valuation. And that was the high. And it's literally fallen 50% from there. So we always have to remember that, is that the emotional triggers within us get us into trouble, while looking at things logically, looking at them logically keeps us much more grounded and making the right decision. All right, on to Tesla. Tesla tagged a key trend line of support on Friday. This is a very important level for Tesla. Keep an eye on it here, guys. If it breaks the 370 level and confirms, that is very problematic for the stock. Gold pulling back today, had a couple bounce days. Again, this is your key support around 3,900 to 4,000. If that breaks, it's headed to 3,600 to 3,500 on gold. And silver, small down day today. This could be a bear flag formation. And again, remember this $64 support that we had, even though it says resistance, it's changed into resistance now. But for the longest time, I was saying, all right, guys, this is support. It broke. What does support become? It becomes resistance. And it's now resistance. So you're going to have a big fight to get back above 64. Path of least resistance is 54 and then $50 on silver. I know people don't like to hear it. I love it because I want to buy. If you're someone who didn't jump in at $100 or 110 or 120, this is awesome. I mean, I love long-term. My metal forecasts are very bullish. I mean, how do you not be bullish? I always say this, but it's like our government just prints more money and spends more money, runs up the debt, all of these factors. The Fed, sure, people think Kevin Warsh is hawkish. I don't buy it one bit. Trump would not have appointed him if he was going to be super hawkish. So all of those factors mean that physical things are going to be more valuable over the long term. But in the near term, we know near term emotion rules. And right now, emotion is on the bearish side of silver. And I still don't think it's flushed out all the weak hands in it. All right, couple other things. We looked at oil already. Nat gas is coming in this morning. Still a general cup and handle. I still have not gone long on this trade. I'm not liking it quite enough yet. I want to see a breakout before I jump on board. And Bitcoin here, Bitcoin is getting a small technical bounce. This morning, MicroStrategy, MSTR, reported that they are forming a US dollar reserve so that they can pay their dividends. The stock jumping in the pre-market. And there's been a lot of speculation that MicroStrategy is in some trouble, but this is making people feel a little bit more comfortable with where MicroStrategy, or I should say strategy, is now in regards to their dividend. STRC, I believe, is the symbol on that dividend paying premium or class A stock or whatever it is. All right. So again, with that, Bitcoin catching a little bit of a bid today, moving up. And again, you can see for the most part, it's still holding technical support. So again, it's not breaking down just yet. There's this trend line right here that I'm following, but it could be making a bear flag. So we need to monitor this. As long as it holds this kind of 58 and change level and doesn't confirm below, I would remain neutral to bullish. But the second it breaks and confirms here, it's probably headed down to the low 50s or even sub 50. All right, guys. Lastly, I do want to just mention here that we do have a sponsor, and they are amazing folks. It is Rumble and the Rumble Wallet. So again, Rumble Wallet, guys, I use it on my phone. It's my actually go-to now for swing trading crypto and gold. And the reason is you can buy gold in it as well. And it's just an easy way to just buy and sell your gold. Again, it's gold in Tether, which is physical metal-backed gold, which is awesome. I really feel more comfortable with buying something that actually buys the physical as well. So for swing trading gold, it's amazing. And then obviously for crypto, easy to buy and sell Bitcoin or altcoins or anything else, very inexpensive, etc. In terms of fees, and it's good to go. All right, guys, On that note, I am going to bid you farewell. Thank you so much for tuning in and supporting Verified Investing. Let's go have a great Monday. Take care.